Hey guys, so we have a trade deal now confirmed, and we're going to get into our Sunday night gamma exposure, critical levels to watch for this week. I'm doing this video and adding it on. I recorded yesterday. I wasn't going to update this, but I know everybody would like blow up the comments. Aaron, the trade deal happened. So I titled the video yesterday, "Trade Talks Fall Apart," because that was the news there. It doesn't really matter. The levels aren't going to change. In fact, it just reaffirms what I'm going to say here in the rest of the video here, which is what we've been talking about. Mostly positive here, and we'd probably be looking at 5750 to 5800. China actually now confirming they will release a joint statement tomorrow. So anyway, with that said, you guys enjoy the video. Take care, and I'll see you guys all tomorrow. Good evening, everyone. This video is for May 11th, 2025. Trade talks falling apart, and we'll get into the critical gamma exposure levels this week. Now, I am recording the video on Saturday, so forgive me if some news changes between now and then. So I'm just going based off of what we've got Saturday. I'm just trying to get these videos out here so I can go through the rest of the weekend here. Also, if you like the content, consider subscribing to the channel. Give me a thumbs up, please. Helps out the channel a ton. I do have some good ideas for another giveaway here soon. We give away a month of active trader, month of swing trades, possibly even maybe a course or something of that nature. If we hit our goals, I like 200 likes per video really helps out the algorithm there. And anything more than that is definitely great. Also, if you like swing trading, day trading, come find me on carnivoretrades.com. We have a live room, and I know you guys will love it. Anyways, let's get into it this week. So spiders here, we talked about this Friday. Nothing really wrong structurally. In fact, you have kind of, if we go to the ES, you have a nice bull pattern here, inside bar, and you're above the 50 MA, right? So this is really, I like inside bars if you're above the 50 MA. If it's below, a little bit weaker, a lot of times they can fail. So we can, I would give the market the upside bias here at least Monday, Tuesday. Now we're going to talk about a couple of caveats here. The Friday video, we did talk about possible risk reversal this week, particularly as we get into the middle to later part of the week. We start to get into a cyclical area where we could see a turn. I was going to show you guys some of the dealer levels. And I was just going to focus on Tuesday and Friday because Tuesday we have CPI, so that's a big one. So we got a pretty loaded week here, which is funny because last week we had a loaded week too with FOMC, and we were basically flat all week, but we still got, this week we're loaded. We have trade talks too, and as far as on a technical basis here, we're still looking at 5750 to 5800, and that's a technical and dealer basis. But I did want to talk about the trade stuff because obviously that matters, and a big disappointment could be problematic here. You can see there was some drama this morning. I guess some Chinese officials walked out without any explanation, and I guess hours later they have concluded. I think I saw somewhere. So nonetheless, we had some. It doesn't really matter. Basically, there was some drama there, and the talks, I guess, fell apart. So that could be problematic. And if we take a look at the flows for Monday, you can see there are some hedges there. So again, this is SPX. Again, I was just going to do Tuesday, just because I was going to say Monday. Usually when you have a CPI week and CPI is on Tuesday, usually you're going to get like a nothing burger Monday, and then the market kind of waits for CPI. But with the trade stuff, I did want to look at Monday, and I know it's hard to see here. Normally I don't go, I don't put this many strikes on there, but we had to kind of zoom out a little bit just because we didn't want to miss any tail hedges. But right now, again, 5,700 is still, the largest magnet. And you can see deltas here are, pretty much neutral there. So that's going to be, fairly magnetic. However, there is a good amount of downside put hedges, right? There's pretty much, this is gamma exposure here, open interest, and you saw this is volume here. There's a good amount of volume down there, 5,600, 5,550, and that lines up there. And there's a few other kind of miscellaneous strikes down there that have decent interest. There's also a very positive delta at 5,550. So if we were to get down there, that could be like a day trading, level that we might want to go long at. Again, this is as of Friday. These levels will change a little bit Monday morning, okay, once the open eye and everything rolls over. But this is what we have as of right now. I'm bringing this up because obviously, let's say there's a big disappointment. We don't know, maybe, something happens tomorrow, it gets walked back. Oh, everything's great. We made great progress, that type of deal. Could be a nothing burger, right? In fact, I was just looking at Bitcoin a minute ago before I did this video. It's not really reacting. Weekend Wall Street isn't reacting. So again, take that with a grain of salt too, because I've seen Bitcoin not react and weekend Wall Street not react before, up until like an hour before the futures open, and then they just tank. So nonetheless, there's hedges there, right? Still have a major dominant level at 5,700 though. So if nothing happens, or if this ends up being kind of overblown, we're still looking at a bullish configuration. We still have a bull pattern on the daily, okay? And we still have positive flows, right? So we're late into the OPEX cycle, and we have dealer buyback going on. And I can tell you, I've shown you guys charts really all week. I don't think I have it up right now, but I've shown you charts all week and last week too, where put premiums are just like destroying call premiums, like in terms of the amount people are willing to pay. So they're shorting into this rally, right? So, and that's what's kept us going higher. But if we look at SPY, you can see kind of a similar look. And I see a lot of these, channels, a lot of, gurus and whatnot, they will look at just SPX, and they don't bother looking at SPY. There's things you can find if you look at both of them. And got to look at the whole picture, the whole enchilada, as we say. But you can see the 560 hedge there. 570 is still your LG1, and 565 is kind of that midpoint. There is, I would say, this is our kind of a proprietary dealer exposure here. That little bit, minus half a bill there at 550, I'd say that's like legitimate enough to be concerned about. That said, again, the supportive flow, we could gap down and it could get bought up. So we'll have to see where we open here, but there is a little bit of risk for Monday. There's QQQ. Again, I just used a huge view there, so sorry if you can't see it, but 485 right there, and then there's some downside at 478, 480. Again, it's still positive. Delta's still positive. If we look at, now this is for Tuesday, going back to SPX. So I wanted to do this because it's CPI. 5,700, 5675 to 80. And there's definitely some downside edges. There's definitely some volume on that too. So I would say this, there's a big right tail if the market interprets this China thing as like a nothing burger, or if we just get a positive, outcome. They're not going to come out with a deal, but like if it just talks go well, and we get a run-of-the-mill CPI, there's a huge right tail. Right, because all these hedges are going to get closed out and dealers are going to buy back very quickly. So that is kind of how that's set up. That's Tuesday. There is, that's I believe, let me just double check that. That might be the, I think that's for Friday. Yeah, I have it here too. But yeah, okay, well there's Friday SPX. And that's pretty much the same as what I showed you last Sunday. Dominance at 5,800. So there's your big right tail for the end of the week, right? And it's pretty much even on either side here. There's SPY for Tuesday. It looks a lot better than SPX does, actually. Less hedges to the downside. And then we got QQQ here. Excuse me, that's SPY for Friday. Last one was for Tuesday. This one's for Friday. Definitely have some downside hedges there too. And then there's QQQ. Some downside edges, 475, 480. You got a big one down here at 465, but it's gonna this is for later in the week. So again, if we're moving away from that, that will decay pretty quickly. Overall though, at face value right now, I'm just gonna say here, like the magnets are higher, barring, like the market needs a reason to go down, essentially, right? So that's kind of what we're looking at. The market, the trade deal could be a thing. CPI could be a thing. I don't think CPI is really that, I know it sounds strange, but I don't think it's that important right now because there's a bullwhip effect going on with the pre-tariff, you know, like, all these companies buying stuff, and even consumers. I mean, like I'm myself, you know, I'm just buying like little widgets and stuff. It's the last chance to get it cheap potentially. So there's that, and that stuff is not that the real CPI is probably not going to really show up for a couple months. So unless we get a big, you know, surprise on CPI, you know, or we get, you know, the trade talks really break down and it looks ugly, there's a, you know, a right tail here, at least for the first part of the week. That's what I would say. So there's always that left tail there, but again, there's still a lot of dealer buyback here, and it's going to take a lot of damage from bears early in the week. Now, later in the week, you know, if we're like kind of on the weaker side and we get bad macro, especially after Wednesday, you know, expiration, then we could see, you know, a little bit of an opening up of volatility. But for this week alone, I'm just going to defer to right now the short-term trend here and the pattern, specifically like on ES. I mean, this looks pretty good here. It's nice and tight. You know, we get up into that, we're consolidating beneath the Liberation Day high. That's, you know, that's good. You want to take out, you know, you don't want to go straight into that big resistance. You want to build up some strength first. But I would say right now on ES at least, that's why I just got this naked chart here with one line. It's very simple. You get up into that, especially by like the end of the week, it's going to be major resistance. I talked about this last week too. It's just going to be major. So it's going to take some time to get through that. We may need to pull back first. We may need to flag. We also could see, you know, bears gain control here. So their window, their time to shine here is getting closer. It's up to them to do something with it though. So we've had a nice rally here, and it's up to them to do damage. But right now, I would just say unless there's a major left tail off of China or tomorrow night, or CPI somehow is ridiculously outsized in either direction, I would give the market the upside bias. At least a 5,700 magnet, but if we break through that and unpin, we're probably going to want to go up towards 5,800. So that's what we're looking at here. QQQ, same thing, 490 and 495 and 500. Maybe even if we get a big right tail, we could go up to the bull market trend line, which you know, 5 points higher, but you know, maybe get some capitulation, short squeeze to get up there. It's possible. It's a ways away, but it's possible. Those are levels we're watching. Let me guys know what you think in the comments. Yes, no, maybe so. You hate the market. You want a short. You want trade deal to fall apart. Let me know. But anyways, guys, I'll wrap it up here. Again, you guys take care. Have a good one. Come find me on carnivoretrades.com, and I'll see you guys all next week.